congestion on the platforms. There is reduced entry.
Hi, so I'm up into London today. It's October 2018 and I'm here for a BlackRock asset management session on the global markets, which would be really interesting considering the markets at the moment with Brexit and with last week some drops in the marketplaces. So I've just come out of Liverpool Street and I'm walking to the BlackRock investment offices, and I'm going to try and get some interviews today and get some snippets of information for you. I'm speaking slightly loudly. I've just come off the main street where it's very busy, and I just thought I'd show you this beautiful garden. And London amazes me because it's extremely busy and bustling, but then you have these wonderful areas that are just absolutely gorgeous. So I'm going to stomp on. I've got my directions and wish us luck. I'm today in some jeans and my boots, and I'm wearing quite dressed down. I've got a nice smart shirt on because there's an awful lot of suit brigade, and as a financial advisor I try and keep it real, and we're normal human beings after all, and we don't need to be all in black suits. So I sort of play a little bit of a protest and wearing my jeans and a shawl today. So let's go see who's going to be there. So hi, I'm Rebecca Robertson, the Director of Evolution Financial Planning, and today we're in London meeting BlackRock, understanding more about the global markets. And I've also met Nigel, who is the Investment Director at iFunds, and I grabbed him before he had his sandwich, just really quickly. He's kindly agreed to take a couple of quick questions from me. So, promise nothing too taxing, but I know that people that are watching will want to know a little bit more about what you think is happening in the markets at the moment. So as an investment director, obviously it's a really simple question that has a huge answer to it, but as a small snippet summary, what would you say is going on in the markets at the moment?
What we're seeing at the moment is a lot of volatility. Volatility is coming from the trade conflict between the US and China.
Yeah.
And also the increase in interest rates in the US.
Right.
So they're creating a degree of uncertainty, and the markets really dislike uncertainty.
Yeah.
The actual underlying corporate profitability of most of the large companies is actually good, and that would indicate that that the markets are well underpinned by good solid company.
So really it's quite a lot of media fuzz at the moment.
There's a lot of media noise, and the media will always focus on the things that make the news.
Yeah.
And they'll promote those stories for obvious reasons.
Yes.
But the actual fundamentals within the global economy are actually quite strong.
Okay, and that's an example of that. Is 4 days yesterday was spent on environmental issues with the information that came out in regards to if we don't make a decision about what's going on in our environmentally globally around plastics, climate change, etc. There was 4 days of literally social media filled with information. And obviously I've been here today talking about ethical funds. So tell me a little bit about how you think those funds, how are they invested and how are they helping those sort of companies, or how are these funds, if you like, how are you picking funds that are more environmentally based or focused?
Well, we specialise on using index funds, and
Can you just explain what an index fund is?
An index fund is actually a basket of companies that track an index.
Okay.
And that index is issued by companies like S&P or Morgan Stanley Capital International, MSCI.
Right.
And they're designed to track specific sectors or groups of companies. And what we're seeing at the moment is a huge evolution of ethically based indexes.
Right.
That you can now buy as a fund.
Okay.
And the growth in the socially responsible and ethically orientated indexes is massive.
Yeah.
And we're seeing a huge move now towards index-based ethical funds.
Okay.
And I think that the momentum is terrific, and it's really quite
It's picking up, especially over the last 6 to 8 months.
It's incredible, and companies now are being scored on their ethical profile
Yeah.
and their social responsibility.
Sure.
And we're seeing that feed now into the indexes. And if they want to be included in those indexes, they have to achieve a certain score. Obviously, certain companies are excluded immediately if they're tobacco companies or
Right.
armament companies.
Right.
They're excluded from the get-go. Then we see a filtering of all of the other companies based on certain criteria.
Sure.
And there's a terrific momentum within the marketplace.
Mm-hmm.
And within the investment community, obviously they're being driven by global concerns, but it's quite heartwarming to see how the investment marketplace is moving to capture this theme, if you like.
Sure.
And mood within the investing public, really.
Definitely. And one of the things that I struggle with is a lot of people, I have a conversation about ethical investing, and it's almost like you're asking the client, are you ethical? And you're not trying to, they're not, of course, everybody wants to be ethical.
Yeah.
So why would you think that somebody would be more swayed towards ethical investing than they would a more sort of core strategy?
Well, in the past, there wasn't that opportunity to go down the ethical route. Now that we're seeing that these funds are becoming much more mainstream,
Yeah.
and are being priced at the same cost base. In other words, the cost of owning these funds is the same as the mainstream funds, and it's fairly well understood now that to invest in an ethical fund doesn't necessarily cost you any return. Then why wouldn't you want to invest in an ethical based portfolio?
Yeah.
Because you're taking on board the same cost and you're expecting a very similar return.
Sure.
So it's a win-win situation.
Yeah, sure. And what sort of companies, just going back to the environmental issue, what sort of companies would that normally look like that fit within an ethical portfolio that are environmentally focused? What would be an example of that?
Well, there's three sort of levels of ethical screening, if you like. There's ones where the entry level, where the companies are screened out purely because what they do. So it might be nuclear or coal.
Sure.
Then the next level is what they would refer to as ESG, where companies get an ethical score.
Sure.
And the amount that you hold of that company will be dependent on how good its ethical score is.
Right.
And then the third screen, the most sort of ethical, if you like, is called SRI, which is the social responsibility.
It's a
screen.
mouthful.
It's a mouthful. And that's the strictest screen. You can still invest in funds and indexes that do that, and the companies that you'll find in there will have passed all of the previous two screens, and then they will pass the third screen. So the companies that will make it into there will have.
Could you give an example? What sort? Because obviously we were excluding in lots of examples big companies, like Apple, like Amazon,
Facebook.
Well,
they're all excluded.
And they're household names.
Yeah.
So what sort of names would you see in there?
The names that you would see in there are on Christopher's spreadsheet.
You don't know them off the top of your head?
I don't know them off the top of my head.
Oh, bless you.
But they are 25% of the whole. So there's only the last quarter, if you like, after the screen will be reduced down. So I know for example, I'm pretty sure
IBM. Okay, that's interesting.
Yeah.
Okay.
Yeah.
Well, thank you so much for your time today. I really
welcome.
appreciate it, and thank you for letting me put you on the spot.
No problem at all.
Thank
no
you.
problem at all.
So back home now, I've travelled home to Kent from London after a busy day, as you've seen, some snippets, and taken my daughter to pony riding, and now it's dinner time. So it's starting to get a little bit dark. It's that time of year where things are getting darker quicker. And so I just wanted to give you a quick summary of the day. One thing I'm finding is that our popularity in ethical and environmental funds and funding and asset management and classes are becoming more and more popular, and there's I would go to say billions of pounds now invested into it. Companies like BlackRock have a separate company for it. They have divisions with where, you know, they've employed at director level and CEO level people with such massive backgrounds to be heading up these departments or these companies now. So ethical investing is, the reason that's important is because what they're recognising is that the consumer has power, and what they're recognising is with that is something that clients and consumers want. They want the world to be a better place in effect, and if they recognise that, then it means that more investments that go into companies that are more ethical, more environmental, more social environments, developments, etc. Then then those businesses will be invested in more, they'll grow more, and it'll be basically all-round encouragement of growth. So that's the first thing that I found. The second thing would be that there was a blip last week in the markets. But that happened in February, and they predicted that they would pop back up again, and already this week we're starting to see that increase. So I hope you found today's video useful, and I look forward to sharing more of you. So just subscribe and you'll get some more updates for us, and somebody would like a drink, so mummy duties. Take care.